Hey guys, this is Rich with Cross Country Mortgage. It's tax time. Ugh, tax time. Nobody likes it. You know who really doesn't like it? Self employed people. They don't like it. Why don't they like it? Well, generally, this is when they figure out how much of a check they get to stroke to the IRS, and their CPA is working with them to absolutely crush that amount and make it as small as possible. Here's the challenge: if you're self employed, and you're looking to purchase a home in the next couple of years, when you crush that tax liability, it also crushes your purchasing power, at least with traditional lending. So I wanted to talk about a couple of the things that we look at today, specifically for Schedule C self employed people when we're looking at tax returns. What does this mean? Schedule C, it means that it's not an LLC, it's not a corporation, it's just filed on their individual tax returns. You see, there are certain expenses that we can add back. Those are good. And there are certain expenses that we actually have to double. That's bad. So when I'm taking a look at tax returns, I'm going to look at things like your net profit. Net profit's a good number, hopefully. Hopefully it's positive. That works. Then what I do is I take your depreciation. Depreciation on the tax return is things like, for example, when you've had an asset like a car, and let's say you've got a 5-year life and you want to depreciate it over 5 years. And by the way, I'm not an accountant, so I don't know how this magic works where they come up with that number. But whatever that number is that they stick in the depreciation box, that's a non cash expense from where I come from. So I get to add that back to your income. Let's say you got a bunch of oil wells out there, a ton of them. You're an oil magnate. Hopefully, you're still coming to me for a loan. But if you've got that kind of money, you might be buying cash. I don't know. But depletion is essentially when you've got an asset and you're pumping, you're using that asset up, it's decreasing the cash value of that asset. That's what depletion is. I get to add that back because it's also a non-cash expense. Other things I get to add back: business use of a home. So if you've got a home office like I do here, then you could potentially write that off. Talk to your accountant, though. Once again, I'm not an accountant, but the business use of a home gets added back to your income. Amortization or casualty loss. So let's say, for example, you buy a business for $100,000, but the assets of the business are only worth $60,000. You've got $40,000 that you paid as a premium for that business, right? Now you get to write that off over a period of years, and your accountant's going to tell you how to do that, and that's called amortization. Once again, it's a non-cash expense because you've already spent that money, so we add that back to your income. If you have mileage that you're doing, we add the mileage back to your income as well, at least a portion of it. Probably a little bit less than half of the mileage exemption. Now, here's a big thing though, and this is a really big one. Whenever I see tax returns, I see a ton of meals and entertainment. You take the kids out, you write that one off. Take the neighbors out and the neighbors' kids out and the neighbors' kids out, and everybody goes out and you write that off. Well, you're only allowed to write off 50% of that rental expense. So what I have to do when I take a look at meals and entertainment is, let's say you write off $1,000 of that to decrease your tax liability. Well, that's only half, right? So I have to pull another of the same amount out of your income. So if you wrote off $1,000 and your income is showing as your net profit of $50,000 and you have no other adjustments, then I have to take another $1,000 off of that. So now I'm only showing $49,000 in income. This is how lenders and underwriters look at tax returns. Now, we have all sorts of other programs out there that can get folks who are self-employed into homes, but I'm just talking about tax returns for conventional income. This is Rich Bond. I hope that this was a very useful video for you. If you got questions, if you are self-employed or know somebody who's self-employed that wants to buy a home, have them give me a call, 281-841-1723. Thanks.